So I like to use power of 3 as an indicator that a trend has potentially ended and price is going to reverse. And I'm going to show you two examples where I've used this. In the first example, I used it to catch a reversal trade, and in the second example, I was able to use it to help me avoid taking a loss. So these are real trade examples, not some cherry-picked case study. So you can see exactly how you can start implementing this yourself. So first, let's break down what PO3 actually is, and if you're already familiar with it, you can skip ahead to the trade examples. So there are kind of two concepts in play here. One you might have already heard of, which is accumulation, manipulation, and distribution. Now these are just fancy words, but all that it really is that price is accumulating, so it's basically accumulating orders or liquidity. It's building a range with liquidity above and below that range. Manipulation just means price is going to either sweep that liquidity above or below. Once we have swept liquidity, that's going to provide momentum for price to head in the opposite direction. So you already know this pattern if you've watched any of my other videos. But if we combine this with power of 3, it becomes more powerful because now you're adding the concept of time into it. So when we use timing, we're looking at price from the open of the week, which is on Monday, and we can look at it up until London session. So that's where it opened. After London, price pushed up higher. So now that we have the hindsight of this week's price action, we can clearly see that this was the high of the week. So you can say that price manipulated higher or took out that liquidity from the Asia range. However you want to see it, we had the open and the high of the week. So power of 3 is essentially the idea that once price opens and on Monday creates either the high of the week or the low of the week, we can expect the remainder of the week to head in the opposite direction. Now this isn't, absolutely set in stone. The high of the week could be created over Monday and Tuesday, but essentially you just want to see a high or a low created. So we had that. And then roughly over Tuesday, Wednesday, and Thursday, you're going to see price following the trend of the week, which is exactly what happened this week. And then the last piece is that over Thursday and Friday, you're going to have the low of the week. Since we already created the high, we have the low of the week, which means on Friday, you expect price to head back up to create the close of the week. You can see now with this weekly candlestick, you see this was the opening of the week that lines up with Monday. Price pushed up higher on Monday opening, which created this wick. So that means the momentum, the rest of this candle, was created throughout the rest of the week on Tuesday, Wednesday, Thursday. Friday, we had that bottom of the wick for it to then close like that. That's a simple concept. You don't need to dive deeper into this formation. That's really all you need to know to be able to trade it, because if you look at my weekly trades, so you can see on Monday, yes, I took a short as well, but it ended up break even. But after this short failed, I can see that price is actually going to continue pushing up higher, and then I know that, oh okay, so Monday we're actually going to be creating the high of the week, and that's why I took the second trade to target that, because I was like, most likely price is just going to continue up higher, but then yeah, it reversed. Close to my TP, I took profits here. Now for the rest of the week, I was looking for shorts, because now I know that we've created the high of the week. We're just going to be following the momentum. You can see here, very strong trend. You can see on Friday, very strong trend. And the reason I say I was able to use power of 3 to help me avoid losses this week is because I had this trade with the trend. We had the BOS retracement, took my entry, very clean TP with 2%. Then we had the BOS over here, and normally if it was any other day, I would put my entry here, put my sell position there, stop loss there, target on 1 to 2, and you can see how quickly that would have been stopped out. But the reason I avoided this trade was because I knew, okay, this was very early in the morning, so we pushed down to create the low of the week. You can see that was the wick down here for the week, and I knew price was probably just going to head up higher and then flatten out to create that close of the week. So let me show you another example just so it's much clearer. So this example is from a few weeks back in April, and it's the exact same thing. So we had Monday, which was the open of the week. Price pushed up throughout Monday, creating the top of this wick, and then the rest of the week we were pushing down to create this massive long wick. And like I said, don't be so focused exactly on the days. It's more just about seeing the overall flow of how price is doing, because you can see the low of the week was actually created on Thursday instead of Friday, but you can see after that price was very rangy, so you could already tell that probably the momentum has died, and on Friday you wouldn't continue looking for shorts. You can see that it was pushing up higher. So yeah, we had that push up and then the close of the week. So once again, I'll zoom in to show you the trades that I took that week. I'll add the executions if I'm bothered, but if you really want to see, you can just scroll back on my Discord. I share all my trades and analysis there. But you can see Monday we swept the liquidity over here, created the BOS, so I knew, okay, so Monday we're probably going to be pushing up higher to create the high of the week, so I took that long over there. And then the rest of the week, this is Tuesday, took a short, very clean. Wednesday, another clean short opportunity. Thursday, took another short. And then, like I say, if it's not Friday, I would definitely take the second trade opportunity to try follow along with the momentum. But on Thursday, it already kind of died. I got stopped out with my trailing stop loss over there. But yeah, price started to flatten out over here, and this is the loss that I was able to avoid on the Friday example that I just showed you. But you can see for this particular week, on that Friday, I could see that on Thursday we were already losing that bearish momentum. So after I saw the sweep of this liquidity, breaking the structure on the left here, took the entry on the retracement, was able to catch a reversal trade on Friday. Even though I was looking for shorts the rest of the week, I was able to end the week with another clean short trade. So this is just very simple, just using timing, just using the understanding of how price likes to trend and pull back. You can put that weekly timing into context when you're taking your trades. And you can see here as well that where does it pull back into 4-hour supply, and well, yeah, on the week after that you get that deeper pullback into that 4-hour supply, and then price starts to head down. So that's just how you would add that weekly timing as further confluence into catching these trades. So I hope that little trick is going to be useful for you guys, and you're going to start to see more examples of that as you trade live. But yeah, thanks for watching, and I'll see you guys in the next one.